Hi everyone, welcome to today's video. First and foremost, interesting change in location. This is exactly the room from where I started my YouTube channel. This is my parents' place, so I'm here for Diwali and I'm shooting this video. So thank you first and foremost for helping me and Zain reach 500,000 subscribers. It means the world to us. I have my mom, mother-in-law, my wife, they all sit and read all the comments that you are posting, and it means the world to us that you're supporting us so much in our journey. So about today's video, I'm going to do two things. I'm going to talk about something called as copycat investing strategy. So I'm going to explain that extensively on this video. Very interesting, very important concept. Please understand it. Second, I'm going to share my view on HUL, Hindustan Unilever, at what levels I'm buying, when am I buying it, and all the other aspects in a very quick format, but I'll hide that information somewhere along the video. So please watch the video till the very end. So let's start the video by discussing what is copycat investing strategy. So I can explain that by sharing a very small anecdote about a billionaire investor, Mr. Mohinish Pabrai. So this is Mr. Mohinish Pabrai. He's a billionaire investor. He stays in the US and he invests a lot in the Indian companies also. So he was asked that, hey Mr. Pabrai, how do you exactly research stock? What are some of the parameters that you look at? What are some of the things that entices you to make an investment in that company? So he said that, you know what? I don't have a very big research team. All I simply do is that I follow really smart people. They do the work for me and I just simply copy their strategies by integrating my own research. That's it, right? So his strategy is that figure out what smart people are doing, copy it in your investing style and start making investments. Now, there are very important lessons hidden in this story for us. One is that even billionaire investors like Mr. Mohinish Pabrai are executing this strategy. They are not shying away from learning from really smart people. That is one. Second, it's not as if that he's just blindly copying these strategies. He understands different things from different people, then incorporate that into his own investing style. Now, why am I sharing this strategy with you? Because right now, if you take a look at Nifty, it is going up and up and up, generally speaking. Yes, it has fallen for the last few days, but generally the uptrend has been there. Now, if you're sitting in this market, you're a new retail investor or you're a retail investor who does not have access to a lot of analysts, who does not understand a lot of things that is going on behind curtains in different firms, and you're not very sure where to put your money, it's a very smart strategy to follow what big investors are doing. So let me share a few examples of recent purchases of big investors like Mr. Rakesh Jhunjhunwala and Mr. Mohinish Pabrai. What is it that they are buying or increasing their stakes in? And I will explain through my own understanding whether or not I will be doing the same or whether or not I'll be a copycat and I will follow their strategies. So I will show you recent additions to these big investor portfolios. What is it that they are buying and why? So let's start with one of India's biggest investor, Mr. Rakesh Jhunjhunwala. And here are three stocks that he has recently purchased. So the first stock is National Aluminium Company Limited, NALCO. Second, he has purchased Indiabulls Real Estate Limited, and third and finally, he has purchased Canara Bank. Okay, so what can you make out of these purchases? So first and foremost, you will see that he has put the most amount of money in Canara Bank, which is a public sector unit. NALCO is again a public sector unit, and Indiabulls Real Estate Limited is a real estate company, right? So it's a real estate financing company. Okay, so let's try to prepare an overall investment thesis for Mr. Rakesh Jhunjhunwala. Why is it that he has taken bets in these companies? And I think this particular article encapsulates why Mr. Rakesh Jhunjhunwala is bullish on these stocks. So let me very quickly take you through some of the key points and then I will delve into deeper details of each of these stocks. First, Mr. Rakesh Jhunjhunwala, bullish on bank stocks, even inefficient lenders, sees decade-long bull run. And this was published towards the end of June, right? So the disclosures that we are seeing, it's for September. So he must have purchased these stocks somewhere in June and September. So this seems like a realistic article. Okay, so first and foremost, even I have been super bullish on banking stocks and I have said it multiple times that for an economy to grow, banks have to grow. That is plain and simple. These are some of my portfolio banks in which I have invested. I have also invested in Canara Bank. I have also purchased additional banks like Union Bank, Punjab National Bank. The reason is very, very simple. This is a value buy. Value buy means that the book value of the company at which Punjab National Bank, Canara Bank, Union Bank are trading, it is very close to the current market price of these banks. So let me show that by sharing the example of Punjab National Bank with you. And I've spoken about Punjab National Bank earlier, and you can see that the current price of Punjab National Bank is 44 and the book value is 84. And I've been an investor in Punjab National Bank from the time it was 36-37 rupees. So I've already made a decent profit on this bank. And you can see from the chart that the volume is picking up. And of course, with this, the price is likely to go up. That's point A. Point B is the bull run factor or bull face scenario, that if India has to grow, the banks have to grow with it. There is just no way that the economy of India will grow, but the banks will not grow, right? That's the second reason. Now you might ask that, hey, Akshat, then that scenario, why did you just not go and purchase HDFC Bank and Kotak Bank and all these good banks? Why are you purchasing banks like Punjab National, Canara and Union? First and foremost, I have both these set of banks and I have explained that categorically. Why am I a big investor in the banking stocks? Now, when I've purchased banks like HDFC, Kotak, etc., that's growth play for me. For example, you must have recently witnessed that last week, Kotak Bank gave a decent breakout and it climbed up a lot in the last week itself. It's a growth play. That bank is going to do fairly well in terms of improving its operational efficiency and bunch of other good things. When I'm purchasing something like Canara Bank or Union Bank or Punjab National Bank, why am I purchasing it? It's a value buy for me. I'm purchasing below book value, and when the market price hits the book value, I'll sell these stocks. That's my simple philosophy on these stocks. Why am I putting this money in these so-called inefficient banks? Very simple reason. Because majority of the bank cleanup has already happened. Mr. Nirav Modi, Vijay Mallya, all they took money, they ran away. This is already reflected in the stock price of these type of banks. The bank cleanup has been very aggressive over the last 4 years. All the major problems that had to be witnessed in the PSU banking stocks had already been integrated, and now we are taking an upward journey. So that is the reason why I am investing in it, and it gives me confidence that Mr. Rakesh Jhunjhunwala is also doing the same. So very quickly, let me share the financials of Canara Bank as well. In the last 3 years, you can categorically see that from March 2020 onwards, the total revenues have gone up massively, right? It has gone up by a lot. The financing profits are negative, except for HDFC Bank and maybe one or two more handful of banks. The financing profits are negative for all the banks, right? So this is not a problem area at all. So please don't assume that just because financing profits are bad, these banks are suffering. Financing profit essentially means that you give a bank 80 rupees, then it furthers that out in terms of giving out loans, right? So it churns that 80 rupees and gives someone a loan and it makes commissions. Now the financing profits have been negative because the loan uptake has been low, just because of the general trend in the economy, and therefore the economy slumped, right? As the economy is kicking back in, what would that mean? It would mean that people will try to avail more and more loans and things will become better, right? So this financing profit will improve for all the banks. And that is one of the key reasons why banking stocks will go up. And very quickly, even the overall profits have been positive. So if we take a look at the pricing chart, you will categorically see that despite having all the value potential, not growth potential, all the value potential, it is just trading at approximately 200 rupees. Therefore, I am an investor in this stock. So let me take you back to that article and let me quickly encapsulate some of the key points that Mr. Rakesh Jhunjhunwala is also making. So he's saying that inefficient banks have had very high cost income ratios. They will come down dramatically. He expects India to grow at 14-15% nominal GDP. It's fair, right? It can grow. Now this will lead to growing demand of money. This is what I meant when I said that financing profits will improve for the banks. Because as the demand for money grows, banks will make more and more profit. Now, Mr. Rakesh Jhunjhunwala has explained the reason also that when there is demand for money, banks will get bargaining power. And then lenders that can garner deposits will get that power. So I'm bullish on banking sector as a whole. Now I 100% agree with this statement. Now SBI will tell a joke on Akshat that, you know what, we have the highest number of deposits. Yes, that's true. And unfortunately today I don't have any jokes on SBI for that reason. Okay, will SBI grow up? I don't know. I'm not betting on SBI, but I'm definitely invested in other PSU stocks. I use SBI as a trading stock. I don't invest in SBI and I never take a long-term view on SBI. So this is about banking stocks and Canara Bank and other PSU banks. Mr. Rakesh Jhunjhunwala has taken a big bet here and I have also taken a similar bet. Now talking about the second stock, which is Indiabulls Real Estate Limited. Unfortunately, I have not done a lot of research on this stock. I was looking at the financials and I will very quickly share it with you. And it scares me a little bit. So for example, here the sales number you can see for Indiabulls Housing Finance, it has been going down. I don't know, I don't have any insider information and I'm not saying that Mr. Rakesh Jhunjhunwala has some. I just don't know it, so I'm cautious and I'm not investing in this company. Profits are negative, sales are not that high. I don't know enough about it. I try to find a lot of information on it. I feel a little bit iffy, so I'm not investing in this stock. So let me speak about the third stock, which is NALCO. Now, very quickly explaining what NALCO does. So, National Aluminium Company Limited, abbreviated as NALCO, is a government company, right? It is government owned and government has approximately 51% ownership. You can check it here. And it is one of the largest integrated bauxite, alumina and bunch of different raw material processing, mining, aluminium refining and bunch of different things it does, right? So it's basically into processing of raw material which has to do with aluminium and bauxite, right? So that is what it simply does. It is government owned. Very important point to keep in mind, because what do we do with government entities? We do value investing in it. So let's check whether this stock is expensive or not. So the stock P is 11.6, right? So it seems to be fairly valued. Book value is 58, current price is not that high from book value. It is a debt-free company, so all good things are there. There is no major problem here. Let us also very quickly take a look at the financials. So the sales have gone up generally, even the profits have gone up generally. Let's look at cash flows, right? This is interesting. So even the cash flow of this company is positive, right? TSU with growing revenues, positive cash flows, growing profits, and with valuations being low, this seems like a good bet. So what is it that we are betting when we are investing in a company like Nalco? We are betting on raw material prices, because if the raw material prices of aluminum, bauxite, or the commodities in general, it goes up, this company is going to become super profitable, right? So everything is tied to commodities. If you are of the view that commodity prices are going to go up, hold something like Nalco, invest in something like SAIL, invest in something like Tata Steel. I am an investor in all these companies. Why? Because I had done a separate video earlier where I shared my point of view that commodity prices are going to go up, especially steel prices. Why? Because again, if you are believing in the narrative that India is going to grow and the GDP expansion of India is going to happen, how will it happen? It will happen with the infrastructure development. What do you need for infrastructure development? You need steel, right? So that is the reason why steel prices has to go up, at least domestically, and India will make more money. That's it. B, India is depreciating its rupee. Why? That's a separate discussion altogether. But with USD terms, India's rupee is getting weakened, which means that India will be able to export more. With China exporting less of steel, India will fill up that slack. Now, there is a very important point to note here, because many of you might be typing in the comment box that, you know what, in China there was massive housing crisis very recently, and because of which the demand of steel from China came down, and that got reflected in the stock prices also. Steel fell, SAIL fell, Tata Steel fell, etc, etc. Now, important point to note is that commodity cycles are long. This is precisely what I said on the commodity video also, that commodity cycles are very long. We are in an upswing on commodity cycle. Therefore, I believe that the steel prices will go up, and accordingly, all these stocks will also see an up move. Now, before we move on to the other investor and I discuss a couple of stocks from his portfolio, recent additions, let me talk about a couple of very important points. That please do value investing in this, and you have to be patient with value investing, right? That is the first key point that you must remember. Please don't go and buy these stocks because I'm telling you and start creating ruckus from tomorrow that Akshat, you said, and these stocks are not moving. This is not a short-term play. This is not a technical play. Now, second point regarding Hindustan Unilever. So I have started aggregating this stock now, and you can see that from its recent high, this stock has fell by approximately 15%. Which is a very big fall, which is fairly a very big fall, and there is a good money to be made here. There are some very good gains to be made here. I will probably shoot another video on HUL, an updated one, why it is one of my favorite stocks. I will do that separately. But to cut the long story short, 15% fall on a stock like HUL, you must start aggregating. I'm not saying that go put all your money. So I'm putting 50% of the money that I had to put on HUL onto this stock. And that is my strategy. If it falls further, I'll buy more. So doing downward averaging on a stock like HUL is completely fine. So far we have understood Mr. Rakesh Jhunjhunwala's strategy of value investing. Now let's take a look at the second investor, Mr. Mohinish Pabrai. And what he does is deep value investing. Now this is super scary for me also, and I'll explain it to you in a minute why deep value investing is super scary for me. So let me take you through the article of one of the biggest buys of Mr. Mohinish Pabrai, and he has increased his position in Rain Industries very recently also, and he's a big believer in this particular stock. So, and here is an article about why he is investing in Rain Industries, right? Very interesting article. You can go through it, but I'll read out some very important points, right? So one key important point was, at one point when Mr. Mohinish Pabrai was holding this stock was trading at a decent high, right? So it was trading at, in US dollar terms, $7. And in a letter to investor, he said that it was a dumb move on his part to not exit that stock, right? He did not exit that stock came back, it has lost its value, but it is still giving him good profits. Now there are a few rationales as to why he has invested in this stock. This is a very interesting sentence. He later declared that it was trading at a PE of 1, okay, PE of 1, putting in that rare bucket of super cheap value stocks. So this is deep value investing. That is what I meant by deep value investing. Now, why is he so bullish on Rain Industries? So this is point number 2, and more important point, that he believes in the leadership of Jagan Reddy, who is the managing director and 40% shareholder of Rain Industries, and he believes in his leadership Therefore, he is going ahead and investing in this stock. Okay, so am I investing in Rain Industries? No, I have never invested in Rain Industries and I have no intention of investing in Rain Industries. Why? Because of the following reasons. One, let us look at what Rain Industry exactly does. So it is in bunch of different things, right? For example, it's in petrochemicals, specialty chemicals, it picks up resins, makes like different things out of it. Super chemistry stuff. Chemistry has always been a very boring subject for me, so I probably do not understand much about this industry and how it exactly operates. There are a lot of things that goes behind the curtain. So I, as an investor, cannot identify very definite growth levers in this particular stock. So I'm staying away. It's a highly diversified stocks and these type of companies tend to take a very high debt. So that becomes a problem for me and I generally stay away from these type of stocks. Second reason why I'm not investing in Rain Industry is that this particular company has not improved its sales, right? For example, if you take a look at from December 2013 onwards, its sales has almost stagnated. It has hardly moved in the last 9-10 years, which is not a great or a healthy sign because the promoter can go and take insane amount of debt. The moment he does it, the stock price will come down. Now, investors like Mr. Mohinish Pabrai might get to know what the promoter is doing and he might be able to cut his stake. But I as a retail investor will get caught in such stocks. Unless I'm getting it for super cheap, like PE of 1, I'm not doing it, right? So it doesn't make sense for me to go and invest in this type of a company. The second stock that he has recently increased his position is Edelweiss Financial Services. So very quickly, what does Edelweiss do? Again, it's a conglomerate type of a business. For example, you have HDFC, right? Then you have HDFC Bank, you have HDFC Life, bunch of different things under the HDFC umbrella. Now, here in Edelweiss, they are trying to do everything together in one bunch. So this makes me a little bit underconfident because I believe in specialized businesses. I might be wrong, but this is my money. I will invest the way I want it. So this is point one. Point two is, let me show you financials very quickly. And this is something that should bother you. Again, this is a very high debt company, right? The debt to equity ratio is 4.32. This is, bad. Okay, so let me take you through the numbers. Now again, same problem, right? That for example, that the company has exhibited moderate sales growth from 2018 onwards. But here is my major problem with the company that right from 2010 onwards, the cash flows have generally been negative. There have been hardly 3-4 years where the company has generated positive cash flows. It means that they are not able to generate business at a tune where they can reinvest the profit into the business. Therefore, they go and keep taking more and more debt. Is that something that makes me comfortable? No, that is not my investing style. Now you might say, Akshat, are you a Gyani? You are going against Mr. Mohinish Pabrai, who is a billionaire investor. No, I'm not. And I'm not trying to go against him. He purchased these stocks. He has more access to information on these stocks. He's a billionaire investor. He can call up the CEO, chat with him, get more understanding. I can't, right? So I play by numbers. I play by the news that is coming in. I play by the data on the internet and I have my own set of investment rules. So this does not fit my criteria, therefore I'm not investing in. That's point one. Point two, I have identified a better company, a similar company but a better company where I've taken bets. For example, that company is HDFC Group, right? I am betting on that stock, therefore I don't need to go and invest in a conglomerate business. I invested in HDFC, I invested in HDFC Bank, I invested in HDFC Life, I invested in HDFC AMC. I am betting on this ecosystem. Therefore, I don't need to take another similar bet. So I hope through this discussion, you got a sense of how big investors like Mr. Rakesh Jhunjhunwala, Mr. Mohinish Pabrai thinks and make their investments. And you as an investor need to follow what to pick versus not. I hope you enjoyed the video. Please press the like button and I will see you the next time.